Hello there, you beautiful people of the internet. Today we're going to talk about this Bitcoin dump, some of the reported actors involved in it, F2 pool quickly becoming villains of the Bitcoin community, and talk about what we expect next with Bitcoin's price action. So hi, this is Brandon with Crypto Trades and Tech. So let's jump right in. First of all, obviously we saw here that the 21st, starting Sunday night, we had a sell-off in Bitcoin, and we were watching this pretty closely. I had a kind of a gut feeling that we were going to sell off, but when we saw this break this trend line I've just drawn in here, came back into that and resumed down, that's when I knew the sell-off was on. And it ended up being a little over 20%. I believe I was looking for a 20% sell-off, and ended up being about 23% sell-off. We can go take a look at this news article here at bitcoin.org, and we saw a large inflow of addresses from F2 pool was the biggest player here, but several whale addresses, 2,700 coins worth, and then F2 pool another 3,600 coins worth. Was this an orchestrated sell-off? I don't know. I feel like it probably was, given the insane inflow. Now, I was looking for a sell-off before these transactions happened, before the inflow happened Saturday through Sunday. I was just had a feeling that we were headed for a sell-off late in the week, but this happened, and that gave me some conviction that the sell-off was definitely coming through Sunday. And there's conspiracies floating all around as to who the culprit is. I don't really care. My feeling of it is, if you've collected a large enough bag of Bitcoin to be able to try to manipulate the market to cause sell-offs and wipe people out and buy back lower, while it feels unethical to me and it's not something I would personally do, I don't feel like there's much that anybody can do about it other than be aware that this is a possibility still. There will come a day when the crypto market isn't going to be that easy to manipulate as the market cap continues to grow, as larger players that are holding more continue to get involved. But obviously the float is what matters, and as whatever the float is, it can be manipulated by large holders of any asset, really. So back to a tweet I put out a little bit ago. You see here I have this trend line coming in at 48,595 to 48,900, depending on which of these locations you pick. You really should probably pick the bottom of this bearish candle over here, which is actually 48. I'm looking at it now here on my chart. On the 8-hour, the bottom of that bearish candle right there is 48,595. We really need to close above that to maintain the local bullish recovery that we're looking for here. Now, something else I want to point out, we were talking about this 1 week. I have the RSI on here for you guys, the 1 week RSI. If we go back to last cycle, I'll highlight this one more time. Last cycle, we saw several spikes of the RSI up to was about an 85 level right here, peaked up to the low 90s, and then it would cool off down to 60, 50 to 60, and then spike again. So we saw this pattern repeating over and over again up to, between, say, 50 and 90, really, for the most part. So I want to give you two observations with that. Notice that last time, now people probably were very shaken out by, and right through here, when the price hit what felt like at the time an astounding $800. I believe that was the bear market swing high. Let's flip over to my BLX chart. Yeah, this would have been the bear market swing high. I apologize for how busy this chart is. I've measured all kinds of things in this chart, and I don't want to remove a lot of this work that I've done here, measuring the different time frames. But if I leave this on a log chart. Yeah, so that spike happened right before the halving event. And then after the halving event, it was actually a little bit slow getting started last cycle. But you see, these were the peaks that we are kind of keyed in on here. But, if you look at these, people were probably shaken out right through here quite a bit. And you look at the price action, this very first peak, price was at $700-something, right? And then it sold off. And then we had another smaller peak. But look where price was at that smaller peak. It went up to $1,300. And then it sold off to $800. And then the next peak, we were up at $2,800. And then the bottom of that RSI put us at $1,800. So notice how many times the RSI peaked and then cooled off while we had consolidation before our final blow off top here, and we hit the $20,000 mark. So we had 1, 2, 3, 4, 5 peaks and then the 6 was the blow off top. Now, in our current cycle, we've had 2 peaks. So does that mean that we have 4 more, really 3 more cycles to go of up consolidation before our final blow off top? I don't know if it'll be the same number, if it'll be 6 weekly RSI peaks or more or less. That I don't know. But this is a good indicator that we're still early in the cycle. The second observation I want to bring your attention to is that this cycle is actually, depending on how you measure it, one of the stronger cycles in Bitcoin's bull market history. And we see here the first cycle had really 3 peaks. The second cycle had 1 major peak early and then a second one later. And this is when Bitcoin was at a much lower market cap. Our total, the highest that the Bitcoin weekly RSI has ever gotten is 98.4 roughly. 98.9, I guess. And obviously an insanely high weekly RSI for that first cycle. I continue to think that our current cycle is going to look more or less similar to last cycle as far as a lot of the price action being a little bit smoother than the first 2 because, again, the market cap continues to grow and it takes more to move the market cap. But going back to a clean chart, what I've done is I put back on here another indicator that I reference from time to time, the 120-day simple moving average. And you can see the touches of it. So when we cross it solidly in the bull market phase, we'll separate from it and then come back to it and touch it, consolidate around it, and then separate from it, touch it, consolidate. And you know that you're in the bear market when you cross below it, you come back into it and show resumption down. When you get that resumption down off the 120 day, it's pretty good confirmation that you're now in the bear market. Whereas on the other end, when you break through, come back to test it and get resumption off of there, it's a pretty good indication you're in the bull market. And you can see that this 120 day SMA has been very accurate as far as that goes for the most part, with a few exceptions. Now, the liquidity crisis being the one notable exception here, our 2020 liquidity crisis, we had broke above it and we were looking to resume and then it just tanked below it. That, I believe, was an outlier black swan event. I think price would have probably consolidated here and never really made that huge dip had it not been for the events of 2020. But what I want to bring to your attention, in every prior bull market, but when looking again at this 120-day SMA, the one takeaway I have is that early in this cycle, we are off to a much, much stronger start than other cycles. And so this is actually the strongest start to a bull market cycle as far as I can see as measuring the separation from the 120-day SMA since the early part of the second cycle. But even the first cycle and the majority of the second cycle were not this strong as far as the separation from that SMA. Now, getting back to the price action here, at this moment in time, if you're watching this video shortly after it's recorded, I feel like we need to hold this 48,595 level on the 8-hour close here. Otherwise, we're probably going down to a 46,433 level, and then we'll see from there. My assumption is that we'll probably hold this level and continue to consolidate. It obviously wouldn't be the end of the world if we broke below here and messed with this trend line that came back down to these other levels and consolidated before resuming up. In any case, I was kind of tracking this little bit of a downtrend we had here, and it looked like it wanted to try to break above that, and this might be a continued test of that breakout trend line here as well, if you see how that's playing out on the very low time frame, the 1 hour. Now, in all fairness, I probably need to draw that on, if I'm looking at it on the 1 hour up here, and you can see that we're coming into it being rejected by it. Now, if I draw it on the 4 hour, we get a little bit different result. But nonetheless, these are highly subjective. We are consolidating down here, nonetheless, is what I see happen. And as with all consolidation, you can break up or you can break down. The odds are, given the strong uptrend, the odds are that you're going to break up. But again, given the extra strong uptrend, further consolidation, a small breakdown into a lower level, and then further consolidation would be welcome from a technical analysis perspective. Now, and when I'm watching these very short-term moves, I like to come over to about the 1 hour time frame on pro.coinbase.com. I don't use Coinbase for active trading, but they do have some of the highest volume. So they're a very good looking glass to see what's going on in the space. You see this very moment in time. You see on the 1 hour here, this price level I've got my mouse set at here at the bottom of this wick of that 1 hour candle. And it coincides with some closing of some bodies over here. That's the level we really need to hold. Now, what I'm looking at here is I'm looking at the trade history on the right side. I'm just seeing the volume of activity, whether it's buying or selling. It's about even right now. You get blocks of buying, blocks of selling. But on the left side, we see the order book. You see the actual orders that are waiting. So that's interesting to watch. You can almost do nothing but trading on this. You can see right here, there's 5 Bitcoin at that price level that was holding up the market for just a second. You can sit here and watch. Another way to visually watch that order book, these are orders that are actively, these are limit orders that are on hold with the exchange. So these are limit orders that have been placed. And these limit orders can be moved. Doesn't mean that they're going to be placed per se. And there are obviously orders coming in right at the spread that are market orders or orders that come in at the last second right on the spread or right. You see, algorithms typically don't place limit orders. These are not necessarily, the algos come in and place active orders right at the spread, and it's very fast. They're placed and they're closed very, very quickly. But you can start to see, using this visualization of this layer 2 data, this depth chart, you can see where the limit orders are. And so this gives you a general gauge of market participants who are willing to advertise their bias in the market, right? So we see here, we have a little bit of a buy bias right now and a little bit less of a sell bias. Now, again, if there's a large player looking to dump a lot of coins onto the market, they're not going to place limit orders and necessarily build a wall. They're just going to, like you saw right there, there's a huge amount of coins being dumped on the market right now. So somebody just dumped a large amount. So the market is currently under pressure, and let's see, sit here and watch and see if buyers come in to support this. You see a whole lot of buyers just come flooding in there. So the battleground right now looks to be right at 48.6. If we go back to our chart, let's look at a very low time frame, 1 hour. You see that 48,595 level? It coincides with several levels, and namely, I think if I go to the 8 hour, you'll see it. This is the bottom of that last bearish candle before we started getting some buying pressure. And so we're coming back down to that exact same level. So this is where we dipped below it, obviously, went below it, but this is where the market caught, and the market reversed on an 8 hour time frame, and buyers came in and started lifting this market back up. So it's a matter of, do sellers have enough volume and pressure to get this below this level for a length of time? Now, they can obviously, a very short, so if somebody were to dump in a very, very large amount of Bitcoin in a very short time frame, you'll get these large wicks where the price temporarily would wick down below here, but the market will quickly equalize. So it's a matter of, are there enough sellers to push this below that level? An 8 hour close is going to be very important, which is coming up here shortly. So you can see as I hover over it, this 8 hour bar started at 1600 UTC, and we're at 2100 UTC at my bottom right there. So that means that we're 5 hours and 15 minutes into this 8 hour bar, and the price, the sellers just pushed that just below there. So I pulled back up our Coinbase pro.coinbase.com. You can see the depth chart here. Again, we still have a little bit of a small amount of buying bias in a very short duration. But the live orders are coming in mostly on the sell side. Well, this is kind of indicative of somebody continuing to try to force the market down. But I mean, it could also be organic sellers, people just getting nervous and selling. Now, the big liquidity events happen when you hit, so right here somewhere, you see the price action right now unfolding as I'm talking about this. As we get below this level, there's going to be a lot of stop losses placed right under this level because a lot of other people are watching those same levels that we are. And so when you get too far below that, you're going to get a large amount of sells as well, which are just triggered stop losses. And that's why we draw these are what I call Heath levels. These white lines are key local liquidity zones, basically places that I think that other traders are going to be placing their stop losses, and that creates liquidity in the market, right? So those stop losses are a form of liquidity. That's a sell order. And then obviously when those get triggered, that will trigger orders on the market. So what we want to look for is the 8 hour close. See the 4 hour candle. I believe we had a 4 hour. Where's our 4 hour at? 4 hour started at 20. We're only an hour and 19 minutes into this 4 hour. So yeah, the 8 hour is the next closure we're looking at here. It's coming up in a couple hours. Of course, the 4 and the 8 are going to coincide with each other, but the 8 hour is the one of significance that's going to be closing next. The 12 hour, we still have some time. Take that back. Now we're coming in the end of the day. So yeah, all these are going to line up. The 4, the 8, 12, and the daily are going to line up together. for the close. So yeah, this next close is going to be really important. Come up here in a couple of hours. Do we close below this level or do we close above it? And that's going to tell us a lot about the potential direction of the market. Well, that's all I really had for you guys today. All in all, you zoom out, take a deep breath, and look, we are very, Bitcoin's been on an absolute tear. It's in a very bullish uptrend. We have this trend line here that we've separated from quite a bit. And I just realized I never took my chart off the log chart as we were watching this whole time. But then we have this parabolic uptrend that we were watching as well. And a whole of that parabolic uptrend would be very bullish for continuation, but a rejection of it or getting back below it here and consolidation, as long as we really stay above this trend line right here, which is coming in now, I believe around 38,000, we're still quite bullish. Now, the really, really key level to watch is our swing high from January 8th. We really want to stay above that as well. That's a really important level. All right, well, if we get some crazy action, I might go live tonight. I think I might have some time, but otherwise, we'll just continue to watch. The close coming up here in a few hours is really what we want to be looking for. If you made it this far in the video, thank you so much for watching my videos. Please like and subscribe if you find this content useful. Perhaps consider sharing the video with somebody if you think that they would benefit from it as well, or any of my other videos. Thank you so much for all your support. Appreciate it. Take care.